get a check on the consumer and the restaurant industry. McDonald's this morning shares ticking higher after improving global sales helped offset some of the weakness in the U.S. Now, the company's still struggling, though, to get foot traffic to pick up significantly, saying that some pressure on low-income consumers is persisting. This week, we're going to hear from a few other names in this space. We're going to hear from Dutch Brothers and Wendy's. Plus, we will also get the latest reading on CPI, where food items like eggs are expected to rise significantly. Here to discuss the industry at large, we want to bring in Peter Saleh. He is the managing director and restaurant analyst with BTIG. And Peter, it's great to talk to you once again. Talk to me just about the threat of inflation right now. And we also have looming tariffs. Lots of questions about whether or not that's going to be adding to some of the inflationary pressures that consumers are seeing. What does this all mean for the restaurant industry?
Yeah, so thanks for having me on. Look, we're expecting this year to be somewhat of a normal year in terms of inflation, low single-digit commodity inflation for 2025, likely low to mid-single-digit inflation for labor, not too dissimilar from what we've had in, I guess, recent past in terms of inflation. Not expecting, at least at this point, much of an impact from tariffs. These tariffs keep getting pushed off. Even if they get put into place, I think the best gauge that we've heard was from Chipotle last week, talking about how 6 to 7% of their commodity basket is coming from Mexico, 1 to 2% coming from Canada and China. That really implies a very modest impact if these tariffs went into place of about 60 basis points on margin, which could be easily offset by some very modest pricing. So I don't expect tariffs to be a big impact to the restaurant space this year, at least as they're being proposed right now.
So, Peter, what do you see as a potential catalyst then for that group? We have heard that foot traffic trends are improving at some places. There was talk about that on the McDonald's earnings report as well this morning. Is that enough to essentially turn into a catalyst here, looking ahead to the second quarter?
Yeah, so I think it's, the impact really that we're seeing, the headwind is really on that lower income consumer. Everybody defines it a little bit differently, but it sounds like middle and upper income consumers are still doing pretty well. So I guess the challenge and really the opportunity is, can you bring these lower income consumers into the restaurants with all these discounts? If you're watching any sort of sports these days, you're seeing $5 and $7, $9 deals at almost every QSR. Can you bring those consumers into the restaurant and convert them to more full price selling as we get into the spring season? I think that's really the question, the opportunity. It's easier said than done, but I think at this point it's still yet to be seen if the QSR industry can execute on that strategy.
Peter, how effective are the discounting strategy and procedure, like what we've seen from McDonald's? Is that almost a race to the bottom?
So we think so. We've been neutral on McDonald's for the past year. If you look at their same store sales, they've been fairly anemic in the U.S. as they've been discounting. We're not hearing great things about January either. About 35% of their sales now are on steep discount or essentially free through the app. That's 3 times the historical level, the highest we've ever seen in the 18 years covering the company. So, again, how this will work is if those customers coming in actually get converted to the more full price items come the spring. But we're a little skeptical on if that's going to happen. They did mention on the call that, that lower income consumer is still down double digits for them in the fourth quarter. So they're still under pressure with that lower income consumer, and they index heavily to that lower income consumer.
Peter, before we let you go, then who is positioned to benefit then the most, maybe, or best positioned within this macro environment?
Yeah, so in this environment, look, two names that are our top picks. One is Starbucks. For 2025, we just see it. It's a good turnaround story, great management team, new management team, and they have a lot of levers they're pulling primarily on the marketing side. For the first time, ever that we can remember, they are actually doing significant TV advertising during sports. I think that is going to bring in that customer, that non-rewards customer, which is where they've lost a lot of share over the past year, 18 months. Our second topic is Wingstop. Here is a company with fantastic unit economics, driving significant same-store sales growth, all with traffic. And they've gotten a little bit more into this discounting game, not as aggressive as everybody else, but they're pricing at $16.99 with a bundle. And our experience with that in the past, when they ran that bundle, is it drove significant traffic improvements. So we're expecting both of those companies to outperform in 2025.
All right, Peter, always great to talk to you. Thanks so much.
Thank you very much.